So let's talk about quick ratio in this video. Quick ratio is also part of the liquidity ratio. Majorly, we have three types of liquidity ratio, which is the current ratio, and we have spoken about that in a previous video. You can check in our playlist, you see it there. We have the quick ratio and we have the cash ratio, absolute cash ratio. So this is the second one, and it is the quick ratio. So what is the quick ratio? It's more or less like the current ratio, but the major difference is that you will now deduct inventory from the current assets. Current assets consist of cash, receivables, consist of prepaid expenses, and inventory. It can be found on the statement of financial position. So once you are calculating current ratio, you use the whole of current assets over current liabilities. But when it comes to quick ratio, what you do is you deduct inventory from current assets and you now divide it by the current liability. The reason for this is creditors, lenders, they want to know how easy will it be for this company to turn their current assets into cash in the case of emergency. Maybe they need to raise cash immediately in order to pay their creditors. How quick will they turn their current assets into cash? So that's why inventory needs to be deducted, since it may take time before inventory is sold. So that's why inventory is taken out of that equation. And another name for quick ratio is acid test ratio. It means how quickly can the company turn their current assets into cash without the inventory. So that's just the simple. And the ideal range when it comes to quick ratio is 1:1. So which means, generally speaking, now industry differ from industry. So what is obtainable in this industry is different from what is obtainable in another industry. For instance, companies with high inventory turnover, e.g., fast moving consumer goods industry, they are comfortable with a lower quick ratio. Maybe if it is less than 1. Why? Because they know that they can easily turn their own inventory to cash, because it is a fast moving consumer goods. So it's different from a company that is selling, let's say, luxurious goods. I hope you understand. So industry differ from industry. So we can't make the comparison except you are comparing with industry average. However, generally, the ideal range is 1:1. If it is less than 1, it means the management will have to pay attention to it, because it's a red flag to the creditors, the lenders, and even the shareholders at times, because they know that the going concern of such a company is threatened when it is far below 1. It shows that the going concern, because it is on a short-term basis. How will this company be able to meet up with a short-term financial obligation? That is what quick ratio is measuring. So it sends a red flag to creditors, to lenders, even to investors, that this company is having an issue. So having said that, if it is above 2.5, for instance, it also signifies something, that maybe the company is also sitting on excess cash. Maybe the receivables, they are selling on credits. That's another aspect. So it is not just that it is low that is the issue, that it's even high, above 2 or 2.5. It's an indication that the company is sitting on excess cash, or maybe they are having too much receivables. I hope you understand. So now quickly let's look at the Apple's case in 2022 and 2023. So in the case study of Apple, you can see that for 2022 it was 0.85:1, while in 2023 it's a ratio of 0.94:1. You can see that there is an improvement. Apple saw that there is a need for them to work on it, even though this is the biggest company in the whole world by market capitalization, the biggest company in the whole world. Yet they saw that there is a need for them to work on it, and that's why you can see that there is an improvement. So it is important that companies pay attention to their liquidity ratio. That's all for quick ratio in this video. In the next video, I'll be talking about cash ratio. If you are yet to subscribe to this channel, kindly do by clicking on the subscribe button and click on the notification bell so you can be notified whenever we release a new video. Till we meet in our next video, stay blessed.